A lot of day traders walking around out there think they're completely crushing it, mostly just because they remember a handful of massive adrenaline-pumping winning trades. But let's be totally honest with ourselves for a second. As humans, we have this terrible, almost built-in habit of completely ignoring the slow, quiet bleed of our daily losses. The real question isn't about those big green days you post online. It's about how much your winners are actually making compared to how much your losers are secretly costing you.
You really have to stop and ask yourself, are you actually profitable, or are you just suffering from selective memory? Let's look at the harsh reality of the markets. There's actual FINRA data analyzing retail accounts, and it shows a staggering 72% of day traders experience net losses over the year. Yeah, 72%. It's a massive reality check. We deceive ourselves constantly, which brings us to the ultimate truth teller in trading.
And that truth teller? It's your profit factor. Simply put, it's your total gross profit divided by your total gross loss. This single metric is a real game changer because it cuts right through all the noise. It literally strips away your emotions, your ego, and your selective memory to reveal if your strategy actually has a real statistical edge or if you're just getting lucky.
Let's anchor this with a super clean example. Take the number 2.0. In the trading world, this is exactly what a highly balanced, solid profit factor looks like. If you're hitting a 2.0, you are squarely in the green. But how do we actually arrive at this number in the first place?
Well, the math here is incredibly simple. You just compare your total winning dollars on one side against your total losing dollars on the other. Say your winners made $5,000 and your losers lost $2,500 over that exact same period. Boom, your profit factor is 2.0. Your winners are making exactly twice what your losers are costing you. It mathematically proves your edge is real.
So, to systematically strip away the noise and calculate your true profit factor, we're going to walk through a 6-step diagnostic roadmap today. Capturing raw data, strategy and sample size, hidden costs, rules versus emotions, the drawdown reality check, and finally, finding your true edge. Let's dive right in.
Step 1 is capturing raw data. This is the absolute foundation. You simply cannot measure your edge if your trading journal is incomplete. You have to hold a mirror up to your own trading habits. Your true number has to include the good, the bad, and the incredibly ugly. You got to track the winners, the losers, and the break-evens. But listen, this is crucial. You cannot skip the painful stuff. You must include your emotional rule breaks and that disastrous 3 p.m. revenge trade you really want to pretend never happened. If you leave those out, your profit factor is pure fiction.
Moving right along to Step 2, strategy and sample size.
If you are just throwing every single trade you take into one giant bucket, you're totally hiding your real performance metrics. You have to measure your profit factor by specific setup. Imagine you have this incredibly profitable breakout strategy, right? But you're also casually trading a reversal strategy that just constantly bleeds money. If you group them together, that 1 week setup drags your entire portfolio down. Separating your trades by playbook is literally the only way to see what actually works.
And hey, you can't go judging a setup after just 5 or 10 trades. 50. 50 is kind of the magic minimum number here. You need a sample size of at least 50 to 100 trades to prove if your edge is actually consistent or if you just caught a random streak of luck. A few click winners might look absolutely incredible early on, but the law of large numbers demands patience.
All right, Step 3 is hidden costs.
This is where a strategy can look like an absolute masterpiece in an Excel spreadsheet, but turn into a complete nightmare in reality. Look at the difference between gross profit and net profit. A high-frequency scalping strategy might look amazing before costs, but those hidden fees, commissions, widening spreads, and realistic slippage, they will bleed it entirely dry. Your true profit factor absolutely has to reflect real execution costs, not just frictionless, imaginary spreadsheet math.
Which brings us to Step 4, rules versus emotions.
Because the way you think directly dictates your profit factor. Try juxtaposing the trades that strictly followed your trading plan against your emotional rule breaks. If your rule-based trades have a massive profit factor, but your emotional trades are completely blowing up your account, well, congratulations. You just learned something incredibly valuable. Your strategy actually isn't flawed at all. Your discipline is. And that tells you exactly what you need to fix first.
Step 5. The drawdown reality check.
Because having a fantastic profit factor alone does not guarantee you're actually going to survive the markets. Even a strategy with a super strong profit factor is going to fail spectacularly if it suffers from account-destroying drawdowns. You've got to track your losing streaks, set maximum drawdown limits, and constantly analyze your risk to reward. Think about it. If you're risking 1% per trade, 10 consecutive losses cost you less than 10%. But if you're risking 3%, those same 10 losses wipe out over 26% of your hard-earned capital. No way you survive that long term.
It really all boils down to this core philosophy. The goal is not just profit. The goal is a strategy you can actually trade consistently. If a strategy makes money on paper but puts you through a 30% drawdown that destroys your mental health and keeps you up at night, it's just not sustainable. You have to manage your risk so you survive long enough for your edge to actually play out.
And that leads us to our final step, step 6, finding your true edge.
So how do we actually implement this massive amount of data tracking without spending hours buried in manual spreadsheets and burning out? Look, most people abandon manual journals after like 60 days. This is exactly where TradeZella comes in. It acts as this automated truth engine. It auto-imports from over 500 brokers, calculates your profit factor by strategy, tracks your emotional tags, and even has a tick-by-tick trade replay so you can review exactly what you did in the heat of the moment.
And getting it set up is literally friction-free. Step 1, connect your broker. It takes like 2 minutes. Step 2, create a couple of strategies to categorize your setups. Step 3, just log some brief notes for your trades. And step 4, commit to a 20-minute Sunday review. That's the whole shebang. The platform literally does all the heavy lifting for you, so the data starts working for you immediately.
So hey, if you want to instantly upgrade your analytics today and get a crystal clear view of your performance, I've got a verified hookup for you. Use my exclusive link down below and the promo code WOR20 to get 20% off TradeZella today. It works on both the monthly and yearly plans, giving you hands down the best tool out there to build real trading discipline.
So I'll leave you with this one question to think about right now. What is your data actually trying to tell you? The numbers absolutely never lie, but you have to be willing to collect them properly and look at them objectively. Find your true edge, build that discipline, and start trading with some real clarity. Catch you in the next one.